commodities king, Dennis Gartman. So which one is it, Dennis?
All of them, Jackie. You have to watch all of them at this point. You have to pay attention to what's going on in the grains. You have to pay attention to what's going on in energy. You have to pay attention to what's going on in the base metals. It was interesting listening to Peter Pukvar, one of the smartest people on the street, are paying attention today to what's going on in copper. I think you cannot avoid the weakness in copper. You cannot avoid the weakness in tin. You can't avoid the weakness in what's going on in the aluminum market. Something untoward is happening in the commodity markets, and attention must be paid to what's happening. And it's interesting, the dollar is actually weakening up a bit today across the board. I think that's only temporary, but it's interesting to me to see that commodity prices are weaker generally with the dollar getting weaker. That's something that we shouldn't see normally, and I think it argues bearishly for commodity prices generally. The only thing that I find supportive is the fact that the USDA's crop report yesterday for corn, soybeans, and wheat were neutral at best. The markets responded bearishly to begin with, but they've shaken it off, and perhaps if you wanted to be bullish, perhaps being bullish of corn simply because so much bearish news is already in the market might make some sense. But on balance, commodity markets don't look all that healthy.
All right, let's break it down piece by piece. You mentioned copper in trouble today. Talk to me about gold and silver.
Well, what's interesting about the gold market is last week there was panic liquidation, no question. And in dollar terms, you took gold under $12.50 in the spot, got it down to $12.42. But interestingly enough, since last week, it is. I find it fascinating that gold has held reasonably well, even has tried to rally as the dollar has gotten stronger over the course of the past 6 or 7 days. That's atypical, and I think it tells me something. I want to own. I've liked the idea of owning gold, not in dollar terms, because I'm bullish of the dollar in broad terms. I want to own gold in euros, and that's been the better trade. I know it's a little complicated for most of the listeners out there, but that's far and away been the better trade. Gold, however, seems to want to hold unless it takes out 1242 on the spot, which I doubt that it's going to do today, and I doubt that it's going to do in the next several days. If you had to trade something in dollar terms, if you made me trade gold in dollars, I'd rather be a buyer than a seller. Well, I think people misunderstand that the IEA report today. Yes, the crude oil inventory was a little higher than expected, but if you take a look at deeper into the report, product inventories were down much more than expected. I look at as I call it, the aggregated inventory, and the aggregated inventory was actually lower on the week and much lower than historically for this period of time. That's the reason why initially you got a sell-off in crude oil, but you've bounded back. In the end, what should be the response from over today's EIA report? It should have been a yawn, because on balance there was no real net change in the aggregated sum. Once we get above $50 in WTI, however, and given the fact that there's a $3.50 to $4 contango to the 1 year, if you can give me $53, $54, $55 for the 1 year forward in crude oil, I, as a fracker, am going to continue to produce. I'm going to continue to drill, and my bankers are going to continue to tell me you need to get some hedges into place. And perhaps what's most important here is that Mr. Sechin, the president of Rosneft, Russia's largest crude oil producer, simply shrugged his shoulders at the idea of a reduction in of Russian production, or a freeze of some sort, and said, why should I do that? If Rosneft is not going to curtail production, nor shall Russia generally, and if Russia generally isn't going to reduce production, the Saudis and the Iranians can't have no choice also. So I think up here, anything above $50, $51, $52 to WTI in the spot should be sold into, no question.
And you highlight a lot of the fears of the marketplace, yet for some reason the headlines always seem to drive these prices higher. Jeff Kilbert.
Oh, I think every dollar, that $6 rally that we got was clearly predicated upon that jawboning effort by the various OPEC ministers. Can they get much more out of it? Can they jawbone it much higher? No, because as I said, if Mr. Sechin from Rosneft says, why should I curtail production, nobody else will either. And again, at these prices, I don't care how bad you are as a fracker, unless you're one of the worst frackers in history, you're going to make money at $52, $53 to $54 for the 1 year forward. So wells that had been drilled in the United States but had been capped are coming back on stream, and new production, new drilling is going to take effect. No ifs, ands, or buts. We're so good at drilling now We're so good at fracking. We've taught ourselves how to do this so very well. What used to take $60 to drill a well now probably has driven that down into the low 30s. So where's crude oil going? On balance, it's going lower, not higher.